Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025 to 2026 are your golden opportunity, and I'm here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So let's start today, prepare smartly, and make your promotion in 2025 to 2026 a reality. Welcome to part 6 of my Path to the Corner Office 2025 to 2026 series, where we break down real bank promotion exam questions and give you clear practical sample answers about case studies and group discussions to help you climb the career ladder faster. Today's subject, some case studies from home loan. Previous case studies link are available in the description. Case study 1, the solar rooftop request. Scenario, Mr. Sharma, an existing Star Home Loan borrower with a satisfactory account conduct, approaches your branch for an additional loan of rupees 4 lakh to install rooftop solar panels. He mentions he is not eligible for the PM Surya Ghar Muft Bijli Yojana. He requests that this loan be a part of his existing home loan account to avoid multiple EMIs. Question: how will you process Mr. Sharma's request? Justify your decision based on the master circular. The solution is decision. The loan for solar panels will be sanctioned as a separate secured personal loan under the personal loan scheme, not as a part of the existing home loan. Justification: as per circular, a loan for installing solar PVs for existing borrowers is to be considered as a secured personal loan. The circular explicitly states separate loan accounts with separate documentation. This ensures proper tracking of the loan's purpose and separate risk categorization. The processing charges will be as per Star Home Loan. The repayment period will be a maximum of 10 years or the remaining period of the home loan, whichever is earlier, and the rate of interest will be the same as the home loan. Mortgage is waived for loans up to rupees 5 lakhs. Case study 2. The high value applicant. Scenario: a high net worth individual, Ms. Kapoor, applies for a home loan of rupees 8 crores for purchasing a luxury apartment in a metro city. Her income documents are robust and her CIBIL score is 780. The property's agreement value is rupees 10.72 crores and the bank's valuation report confirms a realizable value of rupees 10.50 crores. Question: under which scheme should this loan be considered? Calculate the minimum margin required and outline the additional due diligence required. The solution is decision. The loan must be considered under the Star Diamond Home Loan Scheme. Justification: as per circular, the maximum limit under the standard Star Home Loan is rupees 750 lakhs, which is rupees 7.5 crores. Quantum over rupees 7.5 crores is to be considered in the Star Diamond Home Loan Scheme. Margin calculation: as per the Star Diamond Home Loan norms, the margin is 25% on the project cost. The project cost is the lower of the agreement value, which is 10.72 which is rupees 10.72 crores, or valuation, which is rupees 10.50 crores, which is rupees 10.50 crores. Minimum margin is equal to 25% of rupees 10.50 crores, which is equal to rupees 2.625 crores. Maximum loan rupees 10.50 crores minus rupees 2.625 crores, which is equal to rupees 7.875 crores. Since her requirement is rupees 8 crores, it exceeds the eligible amount based on LTV. She must bring in additional margin. Additional due diligence. As per circular, mandatory requirements include independent inspection by two officials, due diligence by an outside agency, a 30-year-old title search report, valuation by two approved valuers, and compliance with credit process audit CPA 1 and CPA 2. Case study 3. The NRI borrower with the power of attorney. Scenario: Mr. Raj, an NRI based in the USA, wants to purchase a property in Mumbai. Due to his work commitments, he cannot be present in India for documentation. He proposes to grant a power of attorney to his brother, who is a resident Indian, to execute all loan and property documents on his behalf. Question: what are the specific guidelines and precautions you must follow as the branch manager to accept this POA? Solution: decision. The POA can be accepted, but strict adherence to the guidelines under the Star Pravasi Home Loan Scheme for NRIs is mandatory. Justification: as per circular, the Star Pravasi Home Loan guidelines are: the POA must be restricted to a close relative, spouse, father, mother, brother, sister, son, or daughter. The original application must be signed by the NRI borrower himself. The POA must be irrevocable, executed on a non-judicial stamp paper, and executed in the presence of officials of the Indian Embassy or Consulate Board. The branch must send a scanned copy of the POA to the Indian Embassy or consulate for verification. Upon receipt in India, the original POA must be submitted to the Registrar of Assurance for adjudication and registration. All documents signed by the POA holder must have a rubber stamp affixed below the signature stating Mr. POA holder's name as power of attorney of Mr. NRI's name. Case study 4. The request for 100% disbursement. Scenario: a customer, Mr. Gupta, has been sanctioned a rupees 50 lakh home loan for under construction property. The builder offers a significant discount if the full payment is made upfront, regardless of the construction stage. Mr. Gupta requests 100% disbursement of the loan amount immediately. Question: can the bank accede to this request? If so, under what conditions? Solution: decision. Yes, the sanctioning authority may permit this, but only if the borrower provides adequate additional security. Justification: as per circular, the full disbursement for an incomplete project is permitted provided the borrower furnishes additional security worth at least 125% of the unsecured portion of the loan. In this case, the unsecured portion is the entire disbursement until the project is complete and the mortgage is created. Additional security required: 125% of rupees 50 lakh, which is equal to rupees 62.5 lakhs. This security can be in the form of an equitable mortgage of another property or a pledge of liquid securities like the bank's own TDRs, LIC policies, surrender value, NSCs, etc., in the name of the borrower or guarantor. This additional security can only be released upon project completion and creation of a mortgage over the financed property. Case study 5. The takeover proposal with a low CIBIL score. Scenario: Mr. and Mrs. Das want to transfer their home loan of rupees 35 lakhs from another bank to Bank of India. The account of the other bank is standard and has been running for 3 years. However, Mr. Das's CIBIL score is a 685 and Mrs. Das's CIBIL score is 710. The circular mandates a score of 700 and above for takeovers. Question: can this takeover proposal be sanctioned? Who is the competent authority to approve it? Solution: decision. The proposal can be sanctioned, but it requires approval from a higher authority due to the deviation in the CIBIL score norm. Justification: as per circular, for a takeover, the CIBIL score of all applicants whose income or ownership is considered should be 700 and above. Since Mr. Das's score is 685, it is a deviation from the scheme norm. The delegation for such deviations is outlined in the circular. The ZLCC and above are the competent authorities to sanction such proposals as per their respective delegations when the CIBIL score is below the stipulated threshold. The sanctioning authority must record the justification for the deviation. Case study 6. Determining eligibility for variable income. Scenario: the salaried applicant, Mr. Patel, provides his documents. His fixed monthly salary is rupees 1,20,000. His last 2 years Form 16 shows a variable pay or annual bonus of rupees 3 lakhs and rupees 3,60,000 respectively. Question: how will you calculate Mr. Patel's gross monthly income to determine his home loan eligibility? Solution: decision. The variable income will be added to the fixed salary, but it will be averaged over the last 2 years. Justification: as per circular for salaried applicants, the variable pay, bonus, etc. may be included based on the average of the last 2 years of excluding taxes and statutory deductions. Average annual variable pay rupees 3 lakhs plus rupees 3 lakhs 60,000 divided by 2, which is equal to rupees 3 lakhs 30,000. Average monthly variable pay rupees 3 lakhs 30,000 divided by 12, which is equal to rupees 27,500. Gross monthly income for eligibility: fixed salary, which is equal to rupees 1,20,000, and average variable plus average variable pay, which is rupees 27,500, which is equal to rupees 1,47,500. This amount will be used to calculate his net take home pay, NTHP, and subsequently his eligible EMI and loan amount. Case study 7: the affordable home loan applicant. Scenario: a small shopkeeper, Mr. Ansari, from an urban area applies for a rupees 18 lakh loan to buy his first home. He does not file ITR but operates a current account with your bank which is linked up to a UPI or POS system. His annual credit summation from digital transactions in the last 12 months is rupees 15 lakhs. His CIBIL score is 680. Question: is Mr. Ansari eligible for the affordable home loan scheme? Calculate his eligible income and identify the sanctioning authority. Solution: decision. Yes, he can be considered under the affordable home loan scheme. Justification: as per circular, income calculation for a self-employed individual with a UPI or POS linked account, 20% of the total credit summation of digital transactions is taken as annual income. Eligible annual income is equal to 20% of rupees 15 lakhs, which is equal to rupees 3 lakhs. CIBIL score: the minimum required score is 675. His score of 680 meets the criteria. Sanctioning authority: the loan is within the permissible limit for other centers up to rupees 25 lakhs. Since his CIBIL score is above 675, it can be sanctioned by the normal delegated authority by the affordable home loan scheme. Had his score been below 675, sanction by ZLCC and above would have been required. Case study 8: the project approval query. Scenario: the RBC head wants to approve a new builders project category under category B for granting home loans to individual flat buyers. The builder has a track record of completing projects on time over the last 3 years. The current project is RERA registered. Question: what specific due diligence must be completed before the ZLCC can approve this project under category B? Solution: decision. The CLCC must ensure compliance with the specific due diligence points for category B projects. Justification: as per section 39(1)(2), page 41, for a project to be approved under category B, the following must be verified. The project is approved by RERA, title and encumbrance search is clear, or an NOC from the builder's bank is to release the encumbrance is available. The valuation per square foot provided by the builder is vetted by the bank's valuer and is as per fair market value. The builder or promoter is not a willful defaulter and their name is not on the CIBIL or RBI defaulter list. Upon approval, financing individual flats in this project will not require a fresh TSR and valuation report for each unit. Case study 9: the smart home loan conversion. Scenario: an existing customer, Ms. Chaudhary, has a standard Star Home Loan account with an outstanding of rupees 28 lakhs. She has a savings account with your branch with a healthy average balance. She wants to convert her existing home loan to a Star Smart Home Loan to reduce her interest burden. Question: what are the prerequisites and key steps for converting her existing loan? Solution: decision. The conversion is permissible subject to fulfilling the conditions outlined in the scheme. Justification: as per circular on the conversion to a smart home loan, The loan to be converted should not exceed the drawing limit or the outstanding amount, whichever is less. The repayment period of the smart home loan cannot exceed the residual period of the existing home loan. A special security document, modified home loan agreement must be obtained. Fresh renewal documents L444C to D, C or D must be executed by the borrower or guarantor. The existing SB or CD account must be linked to the new smart home loan account. The mandate letter from the borrower authorizing the bank to sweep surplus funds above a threshold limit to the loan must be obtained. Case study 10. The PMAYU 2.0 application. Scenario. A customer from a statutory town, Mr. Kumar, applies for a home loan. His gross annual household income is rupees 5.5 lakhs LIG category, and he does not own a pucca house anywhere in India. The property cost is rupees 28 lakhs and he needs a loan for rupees 20 lakhs. He wants to avail of the interest subsidy under PMAYU 2.0. Question. Is he eligible for the PMAYU 2.0 subsidy? If yes, what is the subsidy amount and what are the critical mandatory conditions? Solutions. Decision. Yes, he is eligible for the interest subsidy under PMAYU 2.0. Justification. As per circular, eligibility, he meets the criteria LIG income, which is rupees from rupees 3 to 6 lakhs, first time poker house owner, property in a statutory town, and loan amount within 25 lakh, property cost within rupees 35 lakhs. Subsidy, he is eligible for an interest subsidy of rupees of 4.4% per annum on the first rupees 8 lakh of the loan amount for a tenure up to rupees 12 years. The maximum subsidy benefit is rupees 1.80 lakh, actual release with a net present value NPV of rupees 1.50 lakhs. Mandatory conditions: woman ownership. The house must be in the name of a female owner, female member, or jointly with a female member. Aadhaar card, it is mandatory for all beneficiaries. Lock-in period, there is a mandatory lock-in period of 5 years from the first disbursement, during which the house cannot be sold or transferred. Geotagging, the property must be geotagged as per the payment plan specified. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.